Hello, this is Scott Bear, Mortgage Pro, a branch of American Pacific Mortgage. We are the largest broker network on the entire West Coast, which is a fantastic thing. A lot of support and something that you can comfort your borrowers by. And this is one of many loan product videos I put out for my clients as well as my realtor partners. This particular video is on FHA loans. FHA stands for Federal Housing Administration, and it's governed by HUD, the Housing and Urban Development, the Department of Housing and Urban Development. One thing that most people don't know about FHA doesn't loan the actual money. They only insure the money. So a lender has to be extremely careful regarding all the requirements and make sure that the borrower meets them, or FHA very well may not insure the loan. So a lender is extremely sensitive and very, very hypersensitive regarding making sure that the borrower satisfies all the documentation requirements. Because even after funding and recording, if the lender or if FHA finds something that is deficient, they very well might make a decision to not insure the loan, which is of course a very bad thing and could have very bad ramifications regarding the that would affect the originating lender as well as the loan officer. So there are a few more requirements as far as FHA is concerned, a little bit more paperwork, about twice as much paperwork actually, but it doesn't necessarily double the work. Not any more burdensome, but a little bit more paperwork for the borrower. Some things that are more common about FHA, but still very beneficial. There is an upfront mortgage insurance premium with FHA. It's 2.25% and is based upon the base loan amount. It used to be 1.75%, not too long ago, but they changed that to 2.25%, help FHA gain a little bit more revenue. That mortgage insurance premium is financed, so it doesn't come out of the borrower's pocket. It's literally part of the loan amount and enables the borrower to have a lower monthly mortgage insurance payment. It's rather drastically lower, in fact. Let's say for a $200,000 loan amount, your typical mortgage insurance payment per month would be about $91.66 with FHA. With the same commensurate conventional program, let's say, at 5% down, because that's the lowest down you can come in with conventional, that particular mortgage insurance product would have about $160 per month mortgage insurance obligation. So quite a bit different, $91 to $160. And that's, of course, in a $200,000 loan amount. So quite a bit of benefit as far as the mortgage insurance payment is concerned for FHA. And the amount that the mortgage insurance would, the amount that the loan amount would go up because you're financing that mortgage insurance, and the amount that the payment would go up as a result, very, very, very little. It doesn't even hardly factor into the scenario. As far as your down payment is concerned, FHA will loan as much as 96.5% of the purchase price, which equates to a 3.5% minimum down that the borrower must come up with. It's the borrower's minimum cash investment. The nice thing with FHA, though, is they will allow that minimum cash investment of 3.5% to be paid by a gift. With conventional, they will not allow that. That has to be their own funds. But with FHA, they allow it to be a gift. So definitely a huge benefit with FHA. They're also more lenient with what a gift might be able to cover. Gifts can cover not only the down payment, but can cover the closing costs and the prepaids, prepaid expenses, which are, let's just call them all the closing costs. So a borrower can feasibly come up with next to nothing at the closing table if you arrange it properly with FHA. Another thing that FHA will allow is they will allow non-occupant co-borrowers. Conventional will allow the same thing, but it doesn't even amount to even close to the same thing. Non-occupant co-borrower's income is literally lumped in with the main borrower for FHA. So if the main borrower earns $2,000 a month and the non-occupant borrower's income is also $2,000 a month, then they use the entire $4,000 as far as qualifying is concerned. With with conventional, they only raise the debt-to-income ratios slightly in order to compensate for the fact that somebody else is co-signing. It doesn't really help the scenario, though, because in conventional, you're able to get somebody qualified way beyond as far as the debt-to-income ratios are concerned, and the non-occupant co-borrower is more of a moot point. So that's definitely a benefit with FHA. Another thing that people don't realize is appraisals. They're not as much of a problem as they used to be with FHA. A couple of years ago, it was a little bit more difficult to get an FHA appraisal to come through if there were some problems with the property. They were a little bit more stringent. They're not that way anymore. Basically, FHA is only concerned with health and safety issues. And typically they would be concerned that way with health and safety issues with conventional appraisals as well. So FHA is essentially the same as conventional as far as appraisals are concerned. Another thing that people don't realize is a home inspection, the home inspection that the buyer would normally get when they purchase the home, is also not required with FHA at all. Of course, it's not required with conventional, but it most definitely is also not required with FHA. Most people think that it actually is, but it is not. That's a good thing because appraisers, or I should say lenders, will follow the appraiser's lead on anything that might be conditioned for as far as the appraisal is concerned. Appraiser looks at the property with a naked eye, is not intrusive. They don't crawl on the roof. They don't go underneath the house and find all the things wrong with the property. So as long as the appraisal comes in as is, and that's literally what is marked on the appraisal, the lender is not going to condition for anything, and everything will be fine. So that's another very good thing that people don't know about FHA. FHA is a fantastic product. I'm sure it's going to be around for some time to come. Those are basically the tidbits, the big tidbits regarding FHA that you would need to know. Great product, and hope you have a great day, and ta-ta for now. Bye-bye.